Something that came up a few times this week in different conversations that I've had, one in our live Interaccess session, and one when I was talking to someone who's kind of a long-term crypto investor, Bitcoin investor, who now runs a fund, is looking at returns people have gotten from the early days of Bitcoin or early investment till now versus looking at them in the future. And we often see people talk about the returns of Bitcoin from, 5 years ago, 10 years ago, even from inception, and how incredible they've been. And even looking at what a diversified portfolio might look like if you add like a 1 or 2 or 3% allocation to Bitcoin and maybe rebalance regularly or something. And using that as ammunition to try to get you, the financial advisor, to try to add Bitcoin or add crypto to portfolios and try to add it to your practice. And we have to understand, and what those that are in the Bitcoin and crypto world have to understand, is early on, there was so much risk around investing in Bitcoin. In the super early days, of course, it was an experiment, and it was worth literally nothing. And then it eventually started having more and more value as the network kept moving forward, as more people became interested in crypto. And quite honestly, it had more value as more people traded it, and it became seen as almost like a get rich quick scheme and kind of a gamble and a speculation. There were very few that had that level of conviction to say, this is going to be an asset I'm going to hold on to for a long time. And maybe it's for revolutionary reasons. Maybe it's for those macro reasons that have finally come to fruition. But looking back at the returns of Bitcoin to this point, I think have almost no bearing on what's going to happen in the future, mainly because the circumstances have changed. Bitcoin is now an asset that is in the hands of so many institutions. It's obviously gotten that regulatory approval. Quite a bit of the risk has been taken off of it because of that that SEC approval for the Bitcoin spot ETF. Even though they didn't give express approval of Bitcoin, they did approve a Bitcoin ETF, which leads to so much demand that we've talked about over and over again. So as you're thinking about whether or not you're going to add this to your portfolio, as you're talking about portfolios for clients, I don't think it makes much sense to go backwards and go, here's what have happened in the past had you invested in Bitcoin. Because in the past, it was more of a risk. In the past, you had regulatory risk, you had potentially technical risk, and there was always that risk that a government like the US could shut it down, or other governments could shut it down. And I don't mean shut it down completely, I mean make it illegal within their country to hold Bitcoin, just like at one point it was illegal to hold gold in the US. So I think there was a huge risk which necessitated that huge upside and that huge growth. I don't know if we are going to see that level of growth, that 100x or 1000x or 10,000x growth in the future. So I think looking backwards and going, here's what would have happened in a portfolio, and maybe assuming that might be the same going forward is different. I think it's really important that you as an advisor understand the logic, understand the issuance policy of something like Bitcoin, even understanding the issuance policy of something like ETH, understanding the macro factors that might go into supporting the demand for Bitcoin and ETH, understanding the issuance and monetary supply, and deciding what it looks like in a portfolio, what your plan is from today forward. I know that we always say, past returns are not indicative, or past returns are different from what we can see in the future. Past returns are not indicative of what we see in the future. I think with something that started out as basically an experiment and kind of speculative for a really long time and now has this institutional buy-in, I don't think that even looking back at past returns makes a whole lot of sense. It's what is your narrative, what is your investment thesis now into the future for the next 1, 2, 5, 10, 15, 20 years. What does that look like based on, again, macro factors, micro factors, risk profile of your clients, and how you as the advisor might be able to implement and adopt Bitcoin and crypto for your clients makes more sense. Looking at past returns for Bitcoin up until this point, up until January of this year when Bitcoin spot ETFs were approved, I think doesn't make much sense. It's looking from today forward. What do we think is going to happen to demand? We know exactly what's going to happen to the new supply. We kind of know what's happening to the current supply. We can look at all these new metrics, and understanding all that will help you figure out, how am I going to make this part of my practice? How am I going to make this part of my client accounts? How am I going to allocate? What kind of risk profiles am I looking at? How much allocation am I going to give to my clients? And then what are the expectations I can set with my clients from today forward based on my understanding of, again, issuance policy, risks, supply and demand, macro factors and such. And understanding all those will help you determine, should I make this a part of my practice? Should I make this a part of portfolio? And then how am I going to go about doing that?